Hello everyone and welcome to today's session. So today we are going to discuss a new chapter, that is chapter 9. Okay. Chapter 9, we will talk about SRS. Okay. Before I proceed, any doubt from previous sessions or any doubt you guys have, with respect to whatever we have discussed till now? Any doubt? Okay. If no doubts, then let's proceed further. Okay. So basically, we are going to talk about chapter 9, that is related services. Okay. Now, what is related services? Now, what this pertains to, and how this is different from rest of the uh, essays that we have seen already. Okay. Now, when I talk about related services, it's an kind of a procedure where you do something kind of where you do not provide a assurance. Okay. So let's say, for example, SRS 4400. Now, when I use the term SRS, okay, it is standard on related services. So under this chapter, we are going to see standards on related services. Just write it here. And guys, with me, I'll suggest, please take notes with me so that, by the end of the session, your notes will be ready. You will be done through the module and we will be seeing some questions also. Okay. So I was talking about standards on related services, that is known as SRS. Okay. Now, these standards on related services, SRS, are two major standards. One is SRS 4400 and SRS 4410 that we will be discussing majorly upon. But before we go on to discuss SRS 4400 and 4410, we need to understand what is a related service. Okay. What is, a related service and how this related service is different from your normal audits and normal assurance engagement. Okay. Whenever we talk about, assurance engagement, whenever we use the term assurance, we are, providing some services where a degree of confidence gets enhanced. Okay. So we are providing an opinion. Based on the opinion, a degree of confidence is there of the intended users, which is getting enhanced. Okay. So let's say, for example, I'm giving a certificate. So when I give a certificate, what certificate does is, let's say, for example, I provided a net worth certificate. In net worth certificate, you can say confidence of the reader on the net worth increases. Reason because I have provided an opinion that this net worth is calculated appropriately. So a kind of degree of confidence is getting enhanced because I provided an opinion that is there in the assurance engagement. Okay. That is there in assurance engagement. Now, however, not all engagements are assurance engagements. Okay. Not all engagements are assurance engagement. Means, for example, where you do not issue an opinion, you do not provide some kind of, enhancement of a degree of confidence. You do not, kind of issue a certificate, an audit report. You issue a report, but that is not an audit report, not a certificate. You are not certifying anything, but still you are performing a task, you are performing an engagement wherein you are performing some steps, some actions, some predefined work Okay. We call that term is agreed upon work. Means that is already agreed between client and between the practitioner. Okay. So as I told you, like, it's not necessary that in a service or in a engagement, you always provide an assurance. There are non-assurance services also. Okay. Let's say, for example, when I talk about non-assurance services, simple example, computation of tax, preparation of tax returns, consulting or advisory. Okay. Or let's say, for example, let's say, for example, recalculation of, current assets, calculation of something, data's provision. So there are a lot many assignments where we do not provide an opinion, but we just perform some activities. Now, the question is whether net worth certificate is an opinion. See, most of the time, what we do is we issue net worth certificates, we issue different kind of certificates with respect to some requirement. Okay. Now, when I use the term certificate, you are certifying something. You are issuing an opinion. There is an assurance attached to it. Okay. The term certificate is used when there is an assurance, some kind of assurance attached to the subject matter. The subject matter is net worth, basically. So you are certifying net worth. And that's why it becomes a assurance based engagement. Whenever you use the term certificate. But when I use the term report, okay, let's say, for example, data's aging report, report on kind of inventory, report on calculation of drawing power. So these are reports, not certificate. There is a difference between the term report and the term certificate. Certificate is a higher level of assurance, okay, than the reasonable assurance, and you are kind of providing an assurance. But in the report, not necessary that you are giving an assurance. Okay. So as I discussed, assurance engagement versus non-assurance engagement. And when I talk about non-assurance engagement, one of the category of the non-assurance engagement is agreed upon procedures. And we'll see what are the agreed upon procedures. That Jigar, so there is a question that whether in the case of certificate the opinion is absolute assurance or reasonable assurance. That totally depends upon the wordings of the certificate, the content and form of the certificate that you are issuing. If I issue a certificate with a negative assurance, I could say it's a reasonable or limited assurance. But if I use the such kind of terms which makes it an absolute assurance, then it will become an absolute assurance certificate. But again, that is on the terms or the content or the wordings that you use. Okay. So no, Shruti, no. As of now, we are continuing with chapter 9. Okay. So let us discuss few things first. I'll just, share the module and then we can, study material and then we can proceed further. So basically, we will be discussing two SRS. SRS for 4400, that is engagement to perform agreed upon procedures regarding financial information, and SRS 4410, that is compilation engagement. So, Shruti, if you have any doubt in any of the questions, you can bring it here. We can discuss that. But yeah, we will be continuing the chapter 9 today. So assurance engagement. Okay, just a definition has been given that assurance engagement means an engagement in which practitioner expresses conclusion, okay, designed to enhance the confidence of the intended user other than the responsible party about the outcome of the evaluation of or measurement of subject matter. So that I was discussing that when you issue an opinion, okay, kind of express a conclusion, that is an opinion that enhances the degree of confidence, of the intended users, okay, about the subject matter. In that case, that is a kind of assurance engagement. You are issuing an opinion, but not all engagement performed by the practitioners are assurance engagement. Some, as I told you, preparation of tax returns, calculations, consultations, advisory, agreed upon procedures are certain engagements which are not assurance. We do not provide any assurance in that. Okay. For those are known as non-assurance engagements, and one of such non-assurance engagement category is agreed upon procedures. So guys, this will be new for you. You might be hearing for the first time that we are talking about a standard which is dealing with a non-assurance engagement. Till now, we have seen standards dealing with only audit or assurance engagement. Okay. So when I talk about agreed upon procedures, what is agreed upon procedures? As the name suggests, these are the procedures, okay, which are agreed between the practitioner and the client that are required to be performed on a subject matter. They might be on specific element, account, item, financial statement. Okay, they may be with respect to some of the financial information. Let's say, for example, recalculation of financial information, recalculation of the provisions. Okay, where we do not issue an opinion, we just do a recalculation or we perform some activities, some procedures which is already agreed. Okay. Now, to perform this procedure, agreed upon procedure, or to deliver this kind of services, it may not be necessary that we should be the statutory auditor of the company. It is applicable to all practitioners. Okay. So, if I talk about the definition or the detail given is, it's the auditor is engaged by the client to issue a report on factual findings based on specified procedures performed on specified subject matter, specified elements or accounts or items. Okay. So it is kind of auditor is engaged by the client, okay, to issue a report on factual findings, okay, or based on the specified procedures performed on specified subject matter. That is the thing. Now we will be using the term auditor throughout the standard or the discussion, but that not necessarily be the auditor of the entity. Like we are using the term auditor, but it may not be the statutory auditor. The practitioner can be only a CA in public practice. So generally we will use or denote the term auditor, but not necessarily that should be an auditor. Okay. So the first standard that we are going to discuss is SRS 4400. Pretty simple, pretty straightforward. There is nothing complicated in this standard. Okay. SRS 4400. Now, before I proceed to a SRS, I have a basic question to ask, which we have already dealt with, and till now we have covered a lot of on that particular portion. So my question is, that SQC1 is SQC1 applicable along with SRS 4400. So whenever a chartered accountant in public practice is delivering service as per SRS 4400, whether SQC1 is applicable. Simple question, nothing complicated. So the question is, I'll write it again here. CA in public practice providing services as per SRS 4400, that is services, related services, agreed upon procedures. Okay. Services as per SRS 4400, whether is he required to comply with SQC1 . Come on, guys. Whether SQC1 will be applicable to a CA in public practice providing service as per SRS 4400. Come on, guys. Yes, absolutely correct, Jigar. Absolutely correct, Shruti. Correct, Uday. Correct, Charu. Yes, SQC1 will be applicable because if I tell you the name of SQC1, okay, the answer lies in the name of SQC1. If you see the name of SQC1, it is standard on quality control, okay, of firms performing audit, review of historical financial information, other assurance, and related service engagements. So it covers everything, kind of. Okay, it covers everything. If you see the name of SQC1, it also covers related service engagement, SRS. So that's why SQC1 is also applicable to all the engagements performed by the CA in public practice. Okay. Now, there is one doubt that has came. Earlier, there was a definition where, okay, over here. So in the definition, it was written that to enhance the degree of confidence of the intended users other than the responsible party about the outcome of the evaluation or measurement. In now, other than the responsible party means, if I give you a simple example, you have an auditor, okay, he's issuing opinion on financial statement that they are as per applicable financial reporting framework. Okay, now this opinion is issued for stakeholders, plus this is addressed to management or shareholders. Issued for, okay, so this is the scenario usually in a case of audit. Now when I say intended users, I meant the stakeholders are the intended users. When I say other than the responsible party, so management is the other than responsible party over here. Responsible party about the outcome of the evaluation. Now this is evaluation. Okay. Or measurement of a subject matter. This is my subject matter. This is the measurement through like you do the measurement in comparison of applicable financial reporting framework. So assurance engagement means an engagement in which practitioner express a conclusion designed to enhance a degree of confidence. Now this opinion is conclusion after evaluation. So once you do the evaluation, then you issue a conclusion. After evaluation of the misstatements, you conclude and you issue an opinion. Okay. So that is how the definition is of the assurance engagement. I hope it is clear now. So management is other than the responsible, management is a responsible party. Sorry, not other than, management is the responsible party. My mistake. Yeah. Management will be responsible party. Intended users other than the responsible party are the stakeholders. Yeah. So stakeholders are the intended users other than the responsible party. Management is the responsible party who is responsible for the outcome of the evaluation or measurement of a subject matter. Like they are responsible for the preparation and presentation of a financial statement, which should comply with the applicable financial reporting framework. So this is how the definition works. Clear? Okay. Now let's proceed to SRS 4400. Pretty simple SRS, nothing difficult over here. If you understood the term agreed upon procedures, if you understood the term non-assurance engagement or related services, pretty straightforward and smooth SRS, nothing difficult. Okay. Now, SRS 4400 provides the guidance on the auditors, on the auditor's professional responsibility when an engagement is to perform, agreed upon procedures about some financial information. Plus, SRS 4400 guides with the form and content of the report. Now, I will use the term report, that the auditor will be required to issue in connection with such engagement. So, here is the purpose of this SRS. Why we have this SRS? Number one, to provide the guidance to the auditor on his professional responsibilities. Like, what is the professional responsibility? Number two, that how the form and content of the report should look like when you are issuing a report in accordance with the SRS. So in SRS, the auditor 4400, that is agreed upon procedure, the auditor is engaged by the client to issue a report on the factual findings. Okay. For example, as I told you that, calculation of agings, let's say account receivable aging, inventory aging. So that's a factual finding. Okay. So auditor is engaged by the client to perform some predefined, pre-agreed procedures. Now the objective of an agreed upon procedure engagement is, to carry out the procedures of an, audit nature to which the auditor and entity and appropriate third parties have agreed upon to report on factual findings. Now the procedures which will be carried out over here are of an audit nature. Okay. So the objective of the agreed upon procedure is for the auditor to carry out the procedure of an audit nature to which the auditor and the entity and any appropriate third parties have agreed upon to report on the factual findings. Now, there are two things important over here we need to understand. Number one, that auditor to carry out the procedures. Auditor will be carrying out the procedure, but these procedures are of an audit nature. Okay. Now, these procedures are of audit nature to report on the factual findings. Means the procedure, the term we use are of an audit nature. Okay. Means kind of you are the procedures you perform during the audit or any assurance engagement. So these are not the procedures that management performs. These are the procedures that auditor performs in order to report on factual finding. Okay. But having said that, we do not issue any assurance opinion. Audit procedure may be performed. Let's say, for example, inventory count. If I agree with the management that, okay, I will perform inventory count procedure, that's a type of an audit nature procedure. Okay, inventory count. But at the end, after performing inventory count, the report that I will issue will not be an assurance report, not be a report where I will be issuing an assurance, some kind of assurance. But the report that will be issued will be based on factual findings, that what I identified in actual inventory count. So procedure can be of an audit nature, but at the end you are not issuing an opinion. Okay. Plus the report that is issued under SRS 4400, that is agreed upon procedure, is restricted to those parties that have agreed to the procedure to be performed. Since, other stakeholders will be unaware of the reason of the procedure and may misinterpret the result that you have done. For example, inventory count procedures. Now, this report, you have to write in your report that the report is restricted for these parties related to this service, this kind of procedure that has been performed. Okay. Any doubt till now? Any doubt? Any doubt, guys? Okay. So there is a question that procedure of audit nature means procedure that involved audit of something or some element. Kind of yes. That you are checking something, you are verifying something. That is of audit nature. But after checking, after verifying, whatever actual results are there, actual factual findings are there, you are reporting that. Okay. Now, this standards, okay, provides basically, some kind of, guidelines, general principles for an agreed upon procedure. So this standard provides a guidelines, general principles for agreed upon procedure. Okay. Now we will understand those guidelines or general principles that are necessary. So the general principles which are there, which are necessary to perform the agreed upon procedures, okay, are integrity, objectivity, professional competency, due care, confidentiality, professional conduct, and technical standards. So these are the principles that are required to be followed or adhered to when a auditor is delivering this kind of services. So if an auditor is providing agreed upon procedure engagement, or is providing services for the agreed upon procedure engagement, he needs to make sure about the integrity, objectivity, professional competence, due care, confidentiality, and professional conduct and technical standards. Now there is one missing over here, which is that one. There is one missing in this. If anyone can tell me what is missing over here, which one is missing? Come on, guys. Which one is missing? Come on, quickly. Confidentiality we have. Professional conduct is kind of a professional behavior we have. Very good, Jigar. Can you tell me the reason why that is missing? So confidentiality we have, no issues. Professional conduct is a professional behavior, that is we have. Which ethical principle is missing over here? Correct, Mohammed? Correct, Hari? No, Shruti. Not that one. Which ethical principle is missing over here? So we have integrity, objectivity, professional competency, due care, confidentiality, professional conduct, and technical standard. So we have all these, ethical principles. Okay, we have one missing over here, and that one missing is independence. Now you will ask why independence is missing, why we are not required to be independent when we are issuing an report for the agreed upon procedure. The reason, because when you are issuing a report for the agreed upon procedure, it's not an assurance report. It's not an assurance engagement. So independent is not a requirement for an agreed upon procedure. It may happen that you are not independent because this is not an assurance engagement. So that is perfectly fine. But when you are not independent, okay, when you are not independent, a statement to that effect should be made in the report of the factual findings. Simple. As of now, there is no compulsion on being independent when you are issuing an agreed upon procedure report, but you are required to mention a fact that you are not independent. Okay. Plus, you need to comply with the code of ethics. You need to comply with the ethical principles of integrity, objectivity, professional competency, due care, confidentiality, professional conduct that we have already seen in chapter 19. So I will not repeat it again, but yes, you are required to comply with all these things when you are delivering services with respect to agreed upon procedure engagement. Okay. The reason independence is not required is because here this is not an assurance engagement. You are not issuing an opinion. You are not issuing any kind of assurance opinion where the degree of confidence is getting enhanced. No, we are performing some procedures which is agreed between management and the practitioner. That's it. Professional behavior is kind of professional conduct, which is same, which is there. Objectivity is there. Integrity is there. Not necessarily, Tanisha. Objectivity, being objective and being independent is two different things. Okay? Any doubts? Then comes the next part is defining the terms of engagement. So we will go from start of the engagement, that okay, what are the things, preconditions kind of before the start of engagement. Then we will go to the terms of engagement, engagement letters, terms and conditions of the engagement. Then we'll go to the audit procedure. Then we'll go to the reporting part. What should be the reporting content? And then this is the way the standard flow work. Okay. Now, let's talk about defining the terms of an engagement. Now, when I talk about defining the terms of an engagement, means that the auditor is required to ensure, okay, like whosoever is providing this kind of engagement to the auditor, that, whatever understanding they have developed with respect to whatever procedures they are going to perform, that should be clearly documented. Clear understanding means, for example, if let's say I have been given an assignment to reconcile the general ledger with the sub ledger, that is an agreed upon procedure. I will reconcile and I will issue a report on factual findings. Okay, that is there. Now, that should be agreed between the representatives of the entity and the auditor, that okay, what factual finding procedures that we will be performing. Number two, that will be clarity on the agreed upon procedures. Number two, who will receive the copies of the report. Let's say, for example, today, if I issue a report after performing factual finding procedures, then to whom I am required to deliver the report? To whom I am required to deliver the report. Okay. Third, I need to understand the nature of the engagement, including what procedures are required to be performed. Plus, management understands that this is not an audit or a review. Okay, and this particular engagement is performed for this particular purpose. So it may include then, identification of the financial information that I'm going to, reconcile. Let's say, for example, I'm talking about reconciling of trade receivable subledger versus journal ledger. So identification of that trade receivable subledger, journal ledger as a financial information, nature, timing, and extent of those agreed upon procedures, limitation on distribution of the report, limitation on the use of the report. Everything that we are discussing over here is required to be documented in an engagement letter. Okay, everything that we are discussing over here is required to be documented in an engagement letter. So if we go over here, 2.3.1, the auditor should ensure that the representative of the entity, ordinarily, and other specified parties who will receive the copies of the reports of factual findings, that there is a clear understanding regarding the agreed upon procedure and other conditions of the engagement. Now, which are these other conditions of the engagement that we will see? Nature of the engagement, including the fact that the procedures will be performed, not constitute an audit or a review. Means this is not an assurance engagement, but nature of the engagement. So nature of the engagement will be discussed. Plus, this is not an audit or review. Second, stated purpose of the engagement. Like what is the purpose of conducting this engagement? Third, identification of the financial information, okay, to which the agreed upon procedure will be applied. For example, general ledger, sub ledger that I was talking about. Nature, timing, and extent of the specified procedures to be applied. Whatever agreed upon procedures we have decided. For example, reconcile. So for reconciliation, whatever we will do, we will list out. And the limitation on distribution of the reports of factual finding. Okay. So these are the things that are at minimum required to be included in your engagement letter. At minimum. Correct, Suraj. Very good. These are the things at minimum required to be included in the engagement letter. Clear? Any doubt till now? So as I said, engagement letter, that the auditor sends an engagement letter to the documenting key terms of appointment, and engagement letter, and engagement letters confirms the auditor's acceptance of the appointment. Okay. And helps avoiding misunderstanding regarding such matters. So everything should be documented in an engagement letter. Other matters that you can include in the engagement letter is the listing of the procedures to be performed and the statement of the distribution of the report of factual findings. Okay, that will be restricted to specified parties. So you can include these terms also in your engagement letter. If I show you one example of an engagement letter, just give me a minute. Let me show you one example. This is an example of an engagement letter for an agreed upon procedure that is already given in your SRS 4400. That's a kind of a template. Okay. This is not to be used as a standard engagement letter, but just to kind of give you understanding that how the engagement letter for these kind of scenario works. So see, this is if you see this letter, this is in reference to your letter dated this, appointing us to perform agreed upon procedures in respect of the dash, the respective items or whatever element it is. This letter confirms our understanding of the terms of objective of engagement and the nature and limitation of the service that we will provide. Our engagement will be conducted in accordance with the standards on related services 4400. Engagement to perform agreed upon procedures regarding financial information issued by the ICAI. We indicate so in our report. We have agreed to perform the following procedures and report you the factual findings. And this is the rest of the details which are there. The procedures will be like this. And if I show you one live example, just let me see if I have that example available with me. so that you guys can get a good understanding of the agreed upon procedures. Just give me a minute. Let me check one. If I had one example where I can show you one engagement letter. This is an kind of an example, not to be construed as an standard engagement letter. Plus, this kind of engagement letter is usually basically what you say is not in standard one. Okay, this is something which I have obtained from somewhere, and some information has been redacted, in order to hide the required details of the engagement, because due to confidentiality issues, I cannot disclose the full information over here. But some things are there, and that's why I just want to show you that. Okay. So this is kind of, a report which was issued. This is a report basically, okay, which was issued up for this particular type of engagement. Okay. So if you see, this report is issued in accordance with the terms and conditions as given of the engagement letter. This, what was the agreed upon procedures, what was the responsibility of the management, what was the responsibility of the practitioners. Okay, result, what was the result, restriction on use of these particular report. So kind of an example, and we will discuss this in further once we will reach to a reporting section where we will discuss about the report of this particular content and format of the report. So this is kind of an agreed upon procedure report that I'm showing to you, which is issued as per SRS 4400. Okay. So usually what happens is when these kind of reports are issued, you have a predefined agreed upon procedure. You have a predefined procedures that are already there, that are performed on the basis of some a discussion agreed basis with the management. Let's go back to the engagement letter. So we were discussing about the engagement letter. So when we draft an engagement letter for the SRS 4400, we usually provide details, kind of what procedures we will be performing, what will be the management's responsibility, what will be the auditor's responsibility, and what will be the nature, timing, and extent of the procedures performed. Everything in detail. Everything in detail we describe in our engagement letter. I will try to get a engagement letter format also, but not sure, because see, these kind of engagements are confidential. They are not available to all. As you say, as I said, these are for the specific users and for the specific intended purpose. Okay, specific user plus specific intended purpose. As a result, these are not available to all, and as a result, I could say that these kind of procedures or these kind of reports or engagement letters are not available publicly. That's why it's very difficult to get a copy or a kind of a format of from somewhere. Okay, so let's proceed further and discuss about that we were discussing about the key terms of the engagement. Okay, now we discussed about what can be included in your engagement letter. Okay, the terms and conditions of your engagement that we discussed. Now coming to the part of planning. Pretty simple, there is nothing difficult in this. Now the requirement with planning is you need to effectively plan your work. That's it. You need to effectively plan the work so that the effectively you can deliver the work. That's it. The auditor planned the work so that an effective engagement will be performed. That's it. There is no further requirement with respect to the planning. With respect to the procedures and evidence. Okay. Now, when I talk about procedures and evidence, again, as I told you, that procedures are agreed upon procedures that is discussed between the management or the representatives of the entity and the auditor. So there will be no standard procedures involved. Okay, there are no standard procedures involved. Procedures will be kind of that will be agreed. It may include your inquiry analysis, recomputation, comparison, other clerical checks, observation, inspection, obtaining confirmations. It could involve anything. Okay, identification, and I'll show you one report with respect to the identification of some documents. That's it. So procedures can involve anything. Okay, and that will be agreed between the auditor and the representative of the entity. And now comes the reporting part. When I talk about reporting, okay, there are few basic structure, few things, and the basic structure is already given, okay, in the standard, which includes a title, addressee, identification of specified financial, non-financial information to which agreed upon procedure have been applied, a statement that the procedures were performed were those agreed upon with the recipients, a statement that the engagement was performed in accordance with the SRS, identification of the purpose for which the agreed upon procedures were performed, a listing of specified procedures performed, description of the auditor's actual finding, including sufficient details of errors and exception found, statement that the procedure performed do not constitute either an audit or review, okay, and no assurance is expected, a statement that the auditor perform additional procedure, okay, an audit or review or other matters might have come to light to the report, that would have been reported, a statement that the report is restricted, a statement that the report relates to the element or accounts of items of the financial, non-financial information, date and place, and auditor signature. Now, if I just, provide you, if I compare it with the example that I was showing, so let's say A, title. In the example, see, this is A, the title. Then we have B, addressee. So in our report, this was the addressee, but this has been redacted because of the confidentiality issues. C, identification of special financial and non-financial information to which the agreed upon procedures have been applied. Identification is this one. C, unaudited financial statement for financial year, computation of income tax, and acknowledgement of return filed under income tax. This is the identification of financial and non-financial information. A statement that the procedures were performed, those agreed with the recipient. If you see this particular line, we have performed the procedures agreed with you and enumerated below in clause 6 with respect to this particular one. So this is D, that the procedures were agreed with the recipient. Then we have E, a statement that the engagement was performed in accordance with SRS. This is the E one. The engagement was performed in accordance with our engagement was undertaken in accordance with the standards on related service 4400 engagement to perform agreed upon procedures regarding financial information issued by the ICAI. Then we have F, identification of the purpose for which the agreed upon procedures were performed. So if you see the purpose will be, generally either discuss in the engagement letter, or it's kind of, it's, if it is general, not related to something, then it will be like here. Okay. Like pursuant to the requirements of engagement letter, it is our responsibility to perform the agreed upon procedure solely to assist you in identification of the accurate and correct copies of the original statement. So to assist the management, basically. Okay. If you see this one, solely to assist you in identification. That is the purpose for which the agreed upon procedures have been performed. So that was point number F. Then we have a listing of the specified procedures performed. So this is kind of, we will compare the original statement mentioned in clause 2 and the copies. We will stamp and identify accurate and correct copies. So kind of, what procedures they will be performing. So that is point number G, I think. Yeah, G. A listing of specified procedures. Okay. Then next is a description of auditor's factual finding. So if you see the results over here, it's the auditor's factual finding that based upon the agreed upon procedure as mentioned in 6, we report that the accurate and true copies of the has been stamped by us for the purpose of identification and attached in the accompanying schedule of this report. Then we have I, which says a statement that the procedure performed do not constitute either an audit or a review. If you see over here, because the above procedure do not constitute either an audit or review made in accordance with the generally accepted auditing standards in India, we do not express any assurance on the original statement or its true and accurate copies. Okay. I, that is, it is not an kind of, audit or review. J, a statement that has had the auditor perform additional procedures, an audit or a review, other matters might have come to the light that would have been reported. Means if the auditor would have performed audit, okay, look at over here. Had we performed additional procedures or had we performed an audit or review of the financial statement in accordance with the generally accepted auditing standards in India, other matters might have come to our attention that would have been reported to you. But this is agreed upon procedures. Those procedures have not been performed. So there could be something which we are not reporting over here. So kind of, a statement that if we would have performed an audit or a review, other matters might have come to our attention. But right now we are not performing those procedures. That's why we are not aware of those matters. K, a statement that the report is restricted to the parties that have agreed to the procedures to be performed. If you see over here, our report is solely for the purpose set forth in clause 2 read with 6 of this report is not to be used for any other purpose or to be distributed to any other parties without the permission of the firm. This reports relate to the subject matter enumerated in clause 2. Okay. And does not extend to any other document, statement taken in partiality or as a whole with or without the original statement mentioned in clause 2 of this report. So kind of, this report basically restricted to the parties that have agreed upon the procedure. Okay. Then next is L, a statement that the report relates to the element, accounts, or items of financial, non-financial information specified in does not extend to the entity's financial statement. And it's the same one because if you see the purpose set in clause 2 specifies the item, the details, okay, financial information, and clause 6 specifies the agreed upon procedures. So K and L are satisfied by the same clause. Then we have a date, place, and auditor signature. Over here, you have a date, place, and auditor signature. M, N, and this is O. This will be M, N, and this will be O. So this is how a report is, which is for the under SRS 4400. An example. This is not a standard report. This is not something, is issued by, you know, as a standard report, issued by institute as a standard report. No, this isn't just an example I'm showing you for your understanding that how the reports can be issued under SRS 4400 and how it links with the, the minimum requirement that is there. Again, if you see here, the report on factual findings should contain these particular items. That is the minimum requirement. In this report, we have something more: management responsibility, practitioner's responsibility, SQC1. So there are additional things, and that could be there because SRS 4408 specifies only minimum requirement of the audit or the of the report. You can have further things, you can have additional things, okay, you can have additional paragraphs based on the report, procedure, factual findings, whatever you have done. So it should not be construed that only these items can be there. No, this is the minimum list. Minimum elements to be present in audit report, not audit report, rather SRS report. And the documentation required, that you need to document whatever you have done. So you need to comply with the documentation requirement. So that was SRS 4400, agreed upon procedures. Any doubt? Any doubt? Any doubt, guys? No doubts? Let us see some, test your understanding questions on this particular topic. Questions which are given at the below. B Okay. So there is one question given, test your understanding. Okay, let's discuss this also and then we will proceed forward. So the question is, a company asks you to carry out process of confirmation of its account receivable having balances in excess of 10 lakhs as per its books of account at the close of the year. The work performed only involves preparing and sending confirmation requests to such parties, analysis of variations on receipt of confirmation, and submission of a report in accordance with the professional standards. What points have to be kept in mind for inclusion in reports specifically for such engagements? So the question is, what points are required to have to kept in mind for inclusion in reports specifically for such engagement? Which are the points that you will keep in mind for inclusion in the report? Come on, guys. Come on, come on. Which points you will keep in mind? Pretty much easy. Okay. Good, Mancha. What else? What else, guys? Okay. Good, Manoj. Okay. Good, Charu. Good, Suraj. So basically, guys, see, when I talk about points to be kept in mind for inclusion in the report. It's nothing but these are the points which are required to be kept in mind for the inclusion in report. The factual report finding should contain this particular points. These are the points to be kept in mind for inclusion in report. That's it. This is the given. This is the list already given, that what are the points that you are required to specify in your report. So these are the points have to be kept in mind for inclusion in the report specifically for such engagement. Pretty simple. So we discussed point A to O in detail. Clear? Any doubt? Any doubt, guys? Okay. If no further doubts, let me take one more question. So the question is, Mr. Shah has been appointed as a practitioner to conduct the inventory count at the end of the year and to identify and report any variations to Mr. Manan, the auditor of the company. The management believes that the Mr. Manan does not need to perform any additional procedures related to the inventory count as per SA 501, given that Mr. Shah is already performing the same. Can you please guide the management and Mr. Manan regarding the reliance on the procedure carried out by Mr. Shah? So Mr. Shah is performing some agreed upon procedures for Mr. Manan. Okay. Now, can Mr. Manan directly place a reliance on this procedure? Or, there is some procedure required to be performed as per SA 501. So the question is, can Mr. Manan directly place reliance on the procedure carried out by Mr. Shah, or how he can place reliance on the procedures carried out by Shah? So there is a Mr. Shah, okay, who is performing agreed upon, who is there to perform agreed upon procedures for Mr. Manan, who is the auditor of the company, regarding the inventory very physical count. Okay. Now management believes that after Mr. Shah performs the procedure, Mr. Manan is not required to perform additional procedures related to the inventory count as per SA 501. Let me add something. Mr. Shah is already performing the same as per SRS 4400. Okay. So, simple. That is Mr. Manan required to perform the procedures again if Mr. Shah is already performing the same procedures as per SRS 4400? Come on, guys. Can you please guide the management and Mr. Manan regarding the reliance on the procedure carried out by Mr. Shah? answer is pretty simple. There is nothing difficult here. Pretty simple, straightforward answers. Nothing difficult over here. Nothing. So you need to answer whether Reliance can be placed, yes or no. If yes, then what standard you will follow? According to which standard? No, Shruti. Very good, Charu. But if Mr. Manan wants to place a reliance on the work performed by Mr. Shah, then how he can do that? Is it possible that Mr. Manan can place reliance? If yes, then what is the requirement? What are the requirements to check? Okay, Mansha. So if I bifurcate the question, the first question will be whether reliance can be placed by Mr. Manan on Mr. Shah's work. So there could be two answers for this one, yes and no. If you say no, then I want to understand why, the reason, for answer no. Why? And if you say yes, okay, then what conditions or uh, what conditions are required to be fulfilled for placing reliance, or what Mr. Manan needs to do to place reliance. So simple. Either he can place the reliance, yes or no. If no, then why? If yes, then I cannot directly place reliance. That is for sure. I cannot directly place the reliance. I need to perform some procedures. Either I cannot place reliance at all, either I can place reliance subject to certain terms and conditions. There could be either of any one. Now you need to tell me which is the one over here. If with certain terms and conditions, then what are those terms and conditions? If I cannot at all, then directly no and give me the reason why. Okay, Mansha, very good. Come on, guys, quickly. So this is a classic question on standards on auditing, not the SRS. You might see SRS in the question, but that is a classic question of standards on auditing. Very good, Charu. Very good. And Shruti, then if you say yes with terms and conditions, then what are those terms and conditions? Come on, guys. I'm still looking for the answer that I need. If with terms and conditions, then what are the terms and conditions? If no, then why no? Come on, guys, quickly. Think. Very critical, very important. Come on, guys. So, if I, okay, should I tell you the answer? Pretty much simple. Should I tell you the answer? Very good, Suraj. Yes. The answer is simple. SA 500 management expert. Mr. Shah will be management expert as per SA 500. We need to accordingly rely upon the work performed by the management expert. Yes, we can rely subject to the conditions, and the conditions are given under SA 500. That is there for the management expert. Simple. Now, Mr. Shah is a person who is hired by the management to perform some procedures. Yes, he is a management expert. He's performing some procedures, preparing a report, and he's giving to us the report that we have received from Mr. Shah. He's a management expert because he's been hired by the management to perform some agreed upon procedures. Although I have included SRS 4400, but that question relates to the management expert as per SA 500. So you need to understand in which role what person is, using what evidence. I am here talking from the point of view of Mr. Manan, who is the auditor. So that's why I will give the answer as per the standards on auditing. If there was a question from the side of Mr. Shah, then you would have given the answer as per SRS 4400. So you need to understand from which point of view I am asking the question, or from which person's point of view the question is being asked. If it is being asked from the auditor's point of view, although you have a 10 different things and 10 different people, 10 different assignments, answer will go from standards on auditing side. But on the other end, if the question is from the point of view of Mr. Shah, then the answer may come up with respect to the SRs. SA 500 management expert will be applicable over here. Now, some people are saying that can we apply SA 600? SA 600 is using the work of another auditor. Mr. Shah is not an auditor. Mr. Shah is a practitioner appointed over here. He may be independent, may not be independent. Okay. He is not the auditor. That's why I cannot apply SA 600. Number two, SA 600 is applicable when principal component situation is there. When there is a branch auditor and principal auditor is there. So there is an auditor being appointed as per, after satisfying all the terms and conditions of SA 200, 210, 220 and all the conditions. And he has performed his work in accordance with the standards on auditing. That is SA 100 to 799. If he has performed his work as per SA 100 to 799, he has been appointed as an auditor after complying with all the requirement of the SA, then only I can apply SA 600 and rely upon the work performed by another auditor. Mr. Shah has not been appointed as an auditor, number one. Number two, he has not performed his work as per SA 100 to 799. He has performed his work as per SRS 4400. So he is the management expert, not the auditor. Clear? Any doubt, guys? Any doubt? Okay. If no further doubts, what I propose is let's take a quick 10-minute break. After the break, we'll gather back. We'll take one or two more questions and then we'll proceed further. Okay. Let's take a quick 10-minute break. Welcome back. Let's continue the session. So there is one more question that I want to discuss. Okay, and let's see that question. Mr. Shah was hired to conduct the inventory count at the end of the year and report any discrepancies in continuation to the above question. Okay. After performing the agreed upon procedures, he issued an adverse opinion due to significant misstatement. Point to be noted that there was significant misstatement in the inventory balance reported in the books, which was inconsistent with the physical inventory results, and as a result, an adverse opinion was issued. Okay, the variation were also reported, by Mr. Shah. Now, management was dissatisfied with the report and believed that Mr. Shah should have issued qualified opinion instead, as inventory is not material to the whole financial statement. Okay, now this is in continuation to the above question. Okay, that Mr. Shah has issued a report. So this is in continuation to the above question. Okay, where Mr. Shah has issued a report. Now he has issued adverse opinion. Reason because there were huge, significant misstatement in the inventory balance, which was inconsistent with physical inventory count results. Now, management said that like Mr. Shah could have issued a qualified opinion because inventory is not material to the financial statement as a whole. You are required to guide Mr. Shah regarding the opinion he has issued. Can Mr. Shah issue a qualified opinion in this scenario, or the opinion he has issued is appropriate? Come on, guys. Whether Mr. Shah can Mr. Shah issue a qualified opinion instead of the adverse one he has issued? Now there were significant misstatement in the inventory balance. Now he was hired in continuation to the above question for inventory count at the year end and to report the variations. When he performed the count, he identified significant misstatement, huge variations, and which were inconsistent with the physical inventory results. So do you think because of the significant misstatement in the inventory, the adverse opinion is correct, or a qualified opinion could have been issued? Come on, guys. What do you think? Good, Bansha. I'm waiting for the answer. Come on, guys. Come on, quickly. I have received one answer where Mr. Shah is correct. Come on, guys, quickly. What do you think? Mr. Shah is correct by issuing adverse opinion because he has identified significant misstatement in the physical inventory results? or he could have issued qualified opinion because inventory is not material to the whole financial statement. This will help us to understand the materiality concept further. Good, Charu. Very good. That's the question, Mancha. Come on, guys, quickly. Very good, Mancha. That's the question. Who is correct, Mr. Shah, Mr. Manan? Good, Mohammed. Very good. Think, take time, but I want the answer because we are going to understand the concept of materiality over here. Come on, guys. I have only received one or two answers. I have received answers from Ansha, Charu, Mohammed, Sumit, Suraj, Viraj, Shruti. I'm waiting for your answers. Hari, Jigar, Uday, Tanisha. Come on, try to answer at least. Yes, Suraj, you're absolutely correct. But there is a slight variation, Suraj, that we will discuss. Absolutely correct, Mancha. Think, think more on this. Who is correct, management or Mr. Shah? Mancha, your answer is correct. So, yeah. Come on, guys, quickly. Okay, Suraj, good. So, few questions I would like to pose here. Question number one is how will you determine the materiality for these type of engagement? So whether your material that is whether your materiality will be based on particular element or whether this materiality will be based on whole financial statement level. Second, whether Mr. Shah is correct or management? Two questions. How will you determine the materiality and who is correct? These two questions. If you can answer these two questions, then you understood the concept totally. Trust me. If you can answer these two questions, you understood the concept totally. Thank you, Mancha. Try to answer these two questions. How will you determine the materiality? What will be the benchmark of your materiality? If you would like to take one. And second, whether Mr. Shah is correct or management. Anyone else would like to try? Okay, Suraj, good. So answer to the first question, Suraj. Your answer to the second is there. Answer to the first. If I ask if you would like to take a benchmark for materiality, very good. Very good, Charu. Okay. So, should I provide the answer? Okay, very good, Suraj. Okay, so let me share the answer. So, the first answer to the first question, how will you determine the materiality for these type of engagement? The answer is materiality. Just a minute. Yeah, materiality will be determined, okay, for the only audit related work. Here it is not applicable. If I'm not issuing an opinion, there is no materiality. Number two, whether Mr. Shah is correct or management, answer is none. No one is correct. Why I am issuing an opinion for agreed upon procedure? It's an agreed upon procedure. Simple. First thing as told you, this is not an assurance engagement. It's an agreed upon procedure. And for agreed upon procedure, we do not issue an opinion. If we do not issue an opinion, no materiality, no opinion required, nothing. Adverse, qualified, nothing. We are required to report factual things. The first thing that we discussed was reporting on the factual findings. If I go back to SRS, the objective of auditor is to carry out audit procedures of audit nature and to report on factual findings. If you see this, report on factual findings, not opinion. Factual finding is if there is a misstatement, if there is something not matching, if there is a variation, report the variation. You are not required to issue an opinion, adverse, qualified or something. No. In the example that we saw, okay, that I showed you one example of agreed upon procedures. There was only results. That's it. It's not an opinion. We do not issue an opinion in any case because that's an agreed upon procedure. That's the purpose. Let's say, for example, I give you, a reconciliation for the general ledger and the sub ledger. Okay. And you identify some differences in the reconciliation. You will report the difference because you are reporting the factual findings, but you will not say that, there is a qualified or adverse opinion. I'm not auditing anything. I'm not providing a assurance kind of, here, whether I can say, okay, this is, if I provide a assurance, any kind of, then I can say, okay, this is matching with the criteria, subject matter, the way I do in the audit. In audit, I say that, okay, financial statements are as per applicable financial reporting framework, or they are not. If they are not, then only I say it's a qualified opinion or adverse opinion. Here, I am performing some procedure. That's it. Reporting factual findings. No opinion is required to be issued. If there is no opinion required to be issued, there is no materiality in the picture at all. So the first question comes, how will you determine the materiality? We will not determine the materiality at all because there is nothing, that we work with the materiality over here. Here, the agreed upon procedure means management will tell me the procedures. I will agree with the management. I will perform these procedures. If management will say me perform ABCD, I will perform ABCD. For example, if you go to your study material, test your understanding question. If you see, the question says that for the account receivables having balances in excess of 10 lakhs as per its books of account. Okay. Account receivables having balance in excess of 10 lakhs. Full stop. There is no materiality. I have been given a procedure to confirm account receivables. I will not reply materiality. Now, this involves sending confirmations, preparing confirmations, okay, and analysis of variations. There is no concept of materiality or opinion over here. If there is no concept of materiality or opinion, doesn't make any difference to me. Like, like benchmark or something is not required over here. Opinion is not required over here. Perform ABC, report ABC, outcome of ABC. That's it. Clear? So, when the question says that please provide guidance to Mr. Shah regarding the opinion he issued, your answer should be that Mr. Shah is required to report as per the agreed upon procedures and the factual findings. Agreed upon procedures is not an assurance engagement, hence no opinion can be issued or is required to be issued. As a result, adverse opinion issued is incorrect. Clear? Any doubt with respect to SRS now and agreed upon procedures? That was a very important question that will, clarify the materiality that is not required to be applied everywhere. Like SRS, agreed upon procedures, materiality is not required. Any doubt, guys? Because if you see somewhere, we also discuss SRS application on non-financial information. So if I just show you, if you see over here, an audit expresses an opinion and provides an assurance to the user. However, in agreed upon procedures, engagement only report on the factual findings of agreed upon procedure is provided. No assurance is given to the user. For these are the examples also for agreed upon procedures. Now, if I talk about agreed upon procedures, that may be on the financial information, that may be on non-financial information. It is not, compulsory that the agreed upon procedure should be on financial information. If that is on a non-financial information, how will you apply the materiality? That's why materiality is not relevant when it comes to the agreed upon procedures. And to report, to validate that, if you see a statement, point number L, a statement that the report relates to the element, accounts, items, or financial and non-financial information. Clear? Any doubt, guys? Any doubt? See, whenever you have to answer the question, understand first thing from whose point of view you need to answer. Let's say if I need to answer from Mr. Shah's point of view, not from management's point of view. So you need to think from whose point of view I'm answering the question. Number two, if I'm answering the question, let's say from Mr. Shah's point of view, then in that case, what is the applicable provision in the current scenario? Whether it's a SRS, SAE, or it depends upon the type of the engagement, and then try to answer the question. Manshan, no, ESG will not be counted as an agreed upon procedures, because somewhere a kind of assurance is also given when it comes to the ESG reporting. It will form part of some other engagement, some other type of engagement. You can say it may form part of different type of engagement, but I won't count as an agreed upon procedures. If you are helping management in preparation of the ESG information, then it's a different story. If you are helping management kind of performing ESG audit, whenever the term audit comes, it's kind of assurance engagement. Report on ESG information, or it's a kind of audit. So ESG audits are kind of assurance engagement. Any doubt, guys? Any doubt? Clear? I hope this is clear to everyone. Charu, when you are auditing the inventory, there will be a benchmark. So there is a overall materiality, there is a performance materiality. As per SA 320, you need to apply SA 320 when you audit. But when you do agreed upon procedures, there is no materiality. So if you talk from the point of view of audit, you need to apply SA 320. Clear, guys? Any doubt? Did you get the question? How agreed upon procedures are different from assurance engagement? Okay, Suraj. Good. Good, Mohammed. Okay. So that is one of the agreed upon procedure, that is SRS 4400. Now, the next part that I'm going to discuss is SRS 4410. That's a compilation engagements. Again, these are the, this is part of SRS. So we do not issue any assurance. Again, There is a compilation of compilation engagement, but having said that, there is no opinion issued over here. No opinion issued. Now, when I talk about compilation engagement is kind of, you compile historical financial information. Now, engagement can be there where the financial information other than, historical financial information can be used for compilation, like non-financial information. But usually when I talk about SRS 4410 being used, is for the historical financial information. Okay. And wherever I use the term financial information, it's a historical financial information. So we need to pay focus on historical financial information as of now to understand the SRS. Okay. And when I talk about historical financial information, is something, financial information already there in your audit reports, the company which has already reported. Okay. That is the financial information, historical financial information. Okay. So SRS 4410 talks about compilation engagement for historical financial information, and somewhere may be related to other than the historical financial information, but predominantly it is historical financial information. Okay. Now, what is the scenario? How this engagement comes into the picture? Here, the practitioner is, kind of requested by the management to assist the management with preparation and presentation of financial information. Okay. And, compilation of the financial information. So here, practitioner is approached by the management, you can say, in order to assist management, with respect to the preparation and presentation of historical financial information. Now, management might be required to report the financial information and compilation of financial information as per any law, regulation, or public filing required, may be required for the external parties. Okay, so that is the reason why the financial information is required, and for that management can approach. Now, whether SQC1 is applicable to these kind of engagement, answer is yes. SQC1 is applicable. Reason because, as I told you, the name suggests it is for the related service also. And this is part of the related service. Now, when a compilation engagement is performed by a practitioner, what practitioner does is, usually, he uses his professional expertise of accounting and financial reporting, okay, and compliance with the professional standards, relevant ethical standards, okay. He uses that knowledge and compiles the financial information. Compiles the financial information. Okay. Now, the compilation is not an assurance engagement. And compilation doesn't require to verify the accuracy or completeness of the information. So what happens is, let's say, for example, management is there. Management will provide financial information to practitioner, okay, for compilation. Practitioner will compile and will share compiled financial information. Simple. Management will give financial information for compilation. Practitioner will use his skill, knowledge, okay, to compile, and he will compile and he will give it back to the management. Now, why I say here no assurance is engaged? Reason because this financial information given by management, practitioner is not required to verify accuracy, completeness, authenticity, then integrity of the data, or etc. Practitioner is not required to verify accuracy, completeness, authenticity, integrity, and everything. His job is to compile the financial information. That's it. Okay. That's why he is not required to gather evidence to express an opinion. No, there is no requirement to express an opinion. Simple. Information has been given to you. Compile the information, give it back. Okay. So, compilation of information is required to be done. Now, at the end, management is responsible for the financial information and the basis on which it is prepared and presented. Although we are assisting the management is responsible for the financial information that we have seen in the audit already. Okay. So management is responsible for the financial information that is being presented or prepared. The responsibility includes to give the correct financial information for the compilation, judgment required for the preparation and presentation of financial information, selection of appropriate accounting policies, developing reasonable estimates, internal control, financial records, and everything that lies with the management. Auditor's role is to perform agreed upon procedures regarding compilation. So, practitioner's responsibility when engaged to assist management with the preparation and presentation of historical without obtaining any assurance on that information or to report on the engagement in accordance with the SRS. So compilation can be of historical, financial, and non-financial information. Okay. SQC1 is applicable to all engagement standards that we already discussed. Now, what is a compilation engagement? Compilation engagement, as already discussed, is where a practitioner applies accounting and financial reporting expertise to assist management in preparation and presentation of financial information in accordance with the applicable financial reporting framework. So here the practitioners is only assisting the management by applying accounting and financial reporting knowledge he has in order to prepare the financial information. That's it. Management is still solely responsible for the maintenance and of everything. Okay. Let's say, for example, management appoint you for some advisory work, like, okay, help us in implementation of some Ind AS, help us in preparation and presentation of financial statements which are given to auditor, something like that. So that is something which will fall under the bucket of SRS 4410. Okay. Again, can be based on the requirement of preparation of financial reporting can be based on law or regulation. Okay. Or it may be for the purpose of any other purpose. For example, periodic financial reporting done to external parties like bank or something for management and those charged with governance basis on their particular purpose, like MIS reporting is done for transactional purpose. For some merger acquisition is happening, they require some information compilation for that. Could be for anything. Okay. So either required by law, either can be for, I'll just write in a short form, can be MIS purpose, can be for banks, can be for M&A transactions. So the reason can be anything. But the underlying thing is there is a compilation of the financial information. And compilation is not an assurance engagement. I'll repeat multiple times. It's not an assurance engagement. Hence, practitioner is not required to verify accuracy and completeness of the information provided by the management for compilation. Very important point. Practitioner is not required to verify the completeness and accuracy of the information. Important, important, important. Why this is important? Reason because otherwise you may get confused and you may write it in a way that practitioner is required to validate the accuracy, completeness of the financial information and all that stuff which is there. No, he is not. Do not apply the essays like essay 500, essay 501 or something like that in this scenario. No. Practitioner means practicing CA. Yes. CA in public practice. Another thing is SRS is not imposing any responsibility on management or those charged with governance or overriding any laws or regulations. It is to guide the practitioner in order to discharge the engagement. Like how he can, appropriately discharge the engagement, can perform the engagement, can perform the agreed certain responsibilities. That's it. SRS is not amending any of the, existing provisions, standards, or anything. Now, the objective of the SRS is that the practitioner objective in compilation engagement. Now, we use the term practitioner objective over here. Because this is not an assurance engagement, we use the term practitioner's objective is to apply accounting and financial reporting expertise to assist the management in preparation and presentation of financial reporting, financial information in accordance with financial reporting framework based on the information provided by management. Number two, in report in accordance with the requirement of SRS. Two things, pretty simple. Apply expertise based on the information given by management and report in accordance with the SRS. Okay. Now, as I told you, management retains the responsibility for the financial information and basis on which it is prepared and presented. The responsibility includes, presentation and preparation of financial statement, selection of accounting policies, developing reasonable accounting estimates and everything. Why this is included over here? Because get this agreed in engagement letter of SRS. That's why it is being repeated that, okay, management is the responsible one. You need to make sure that this point is there in your engagement letter, that management acknowledges his responsibility. Management needs to acknowledge his responsibility with respect to, preparation and presentation of financial statement or information. So that you are required to ensure that management understands their responsibility. Now, financial, as I, multiple times I'm using the word that, financial information in accordance with the financial reporting framework. Okay. So financial information in accordance with the financial reporting framework. It can be special purpose financial reporting framework. It can be general purpose financial reporting framework. It can be any type of framework. Okay. Can be any, not only general, it can be any framework. So different financial reporting framework can be used to prepare and present financial information. The financial reporting framework adopted by the management, okay, will depend upon the nature of the entity, but it is adopted by the management. Management decides the financial reporting framework, not the practitioner. Okay, that's why this is also required to be agreed with the management, that financial reporting framework as adopted by the management. Agree in your engagement letter. Kind of preconditions. Remember, in SA 210, we have seen preconditions to an audit. You can say, kind of preconditions over here. Any doubt till now? Any doubt? Any doubt? Okay. Then the practitioner shall comply with all the ethical requirements. So he is required to comply with the ethical requirements. He is required to comply with the code of ethics. Okay. With respect to threats to practitioner compliance with relevant ethical requirement. So he needs to comply with all ethical requirements which are there. Now, again, as I said, this is not an assurance engagement, and hence, as it is not an assurance engagement, independence requirements do not apply. Pretty simple. Independence is not mandatory. However, wherever there is independence is not there, specify the same in your report as per the laws and regulations. Specify, you need to specify you are not independent as such. So that depends upon the types of laws and regulations under which you are performing the engagement. But again, independence requirement is not compulsory. Okay. Now coming to the terms. Okay. The practitioner, again, as I said, engagement SQC 1 is applicable. Okay. If the SQC 1 is applicable, the engagement level quality control requirements are directly applicable. That engagement partner shall take the responsibility. Engagement partner is responsible for all the things. That is by default applicable. Then comes the second point is agreeing the terms. Now, practitioners shall not accept the engagement unless these terms are agreed with the management. Okay. Number one, the intended use and distribution of the financial information, and any restriction either on the intended use or distribution. That should be first agreed. That what is the intended use. Number two, identification of the applicable financial reporting framework. That is responsibility of management. Management has to provide me that identification. Objective and scope of compilation engagement. So what is the objective and scope? Responsibility of the practitioner, including requirement to comply with ethical requirements. That is the responsibility of practitioner. Responsibility of the management. That the financial information preparation, it's a management responsibility. That the financial information and for the preparation and presentation thereof in accordance with the financial reporting framework, okay, is acceptable in the view of the intended use of the financial information. Means whatever financial reporting framework is being used, that should be acceptable. It's a responsibility of management that the financial reporting framework should be acceptable. Number two, management is responsible to design, implement, and maintenance of internal controls necessary for the preparation and presentation of financial statement, which should be free from material misstatement due to fraud or error. Basic that we are seeing. Management is responsible for the accuracy and completeness of the records, document, explanation, and information provided by management for the compilation. So accuracy and completeness, management responsible. Management is responsible for the judgment needed in the preparation and presentation of financial information, including those for which the practitioner provided the assistance in the course of compilation. So management is responsible for the judgment needed. So management should agree for these responsibilities. One, financial reporting framework should be acceptable. Management responsible for making sure that FRF, financial reporting framework, is acceptable. Internal controls, design and implementation of internal controls, accuracy and completeness of the data that is provided for the compilation, and judgments made in compilation. For all the four items, management is responsible. Then the auditor needs to agree the expected form and content of the practitioner's report. These are the minimum requirements for the engagement. Minimum required or slash to be agreed in year. Okay, minimum required kind of in your engagement letter. Clear? Any doubt? Any doubt? Okay, so there are few doubts. FRF, yes, like Ind AS, Schedule 3, some other reporting standards, whatever may be. So that is financial reporting framework based on which you prepare your financial statement. A statutory auditor can be appointed as a practitioner for the same company. Answer is no. Reason because that will be a conflict of interest. There could be threats, okay, to the fundamental principles. Because let's say, for example, compilation of financial information. If the auditor is being appointed to compile the financial information, then he is kind of reviewing his own work, self-review threat. So you need to make sure that threats are not present. The engagement, if anywhere the auditor is involved in a non-assurance engagement kind of thing with the management with respect to the financial information which is he is going to audit, not allowed. Practitioner is not accountable here, okay, for accuracy and everything, but he needs to comply with the code of ethics. Breach of this will attract the consequences. Answer is yes. So he needs to actually, behave professionally. Professional conduct should be there. Integrity should be there. Objectivity should be there. Okay. Ethical requirements are required to be complied. Okay. If there is any breach in the ethical requirements, then yes, there will be consequences. Which both one, Yedu Kondalu, that you are referring to? Correct. He can't. So auditor can't check what he has only prepared. That's why he cannot be a practitioner as far as SRS plus auditor. Both engagement he cannot take. Any further doubts, guys? Any further doubts? Very important part, very important, concept to understand, different from audit, different from assurance engagement. Any doubt, guys? No? No doubts? Okay. Okay, good. So let's continue. So these are the minimum things to be included in your engagement letter. Okay, minimum points. Now these engagement letters should be in a written form, suitable written form. Okay, always preferred. Written engagements are always preferred prior to the performing engagement. That should be in a written form. That is more preferred. On recurring compilation engagement, that recurring one every year you are getting. You need to practitioner needs to evaluate whether circumstances, including the changes in engagement, acceptance, consideration, requirements of the terms and to be terms of the engagement are required to be revised. Whether there is a need to remind management of the existing terms. So let's say, for example, every year there is a recurring compilation engagement. Every quarter there is a compilation engagement. So you need to understand whether there is a change in the terms and conditions. If yes, then remind the management about the change. If there are no changes, then you can proceed forward. So you need to check before start of the engagement with respect to the recurring engagements. Then the next part is performing the engagement. Very important. Now it comes, we were talking about, what has been done till now with respect to the engagement. Now it is performing the engagement that we need to discuss. And that's the big one that we need to understand. Okay. So performing the engagement. Practitioner basically, okay, is required to obtain the understanding, okay, of the entity's business operation, including accounting system and financial reporting framework. So whatever you get agreed in your engagement letter, you need to take understanding of that. See, what is compilation agreement is? Compilation engagement is management is giving you some information. You need to prepare financial statement. Okay, let's say management has given you trial balances. These are the trial balance. Now prepare financial statement. Do you think can you prepare financial statement only the basis of trial balance? So do you think you can prepare that financial statement only basis of trial balance? Yes, no. Can you prepare financial statement only basis of trial balance? Come on, guys. Can you prepare that? And in which area you will find difficulty? What additional information you might be required for that? In a financial statement, other than the numbers, there is a lot many other things like notes to financial statement, details of loans, details of fixed asset properties, secured, unsecured, a lot of gross value, everything is there that might not be available from your trial balance. Remember? So we place a lot of things in financial statement, in the notes, significant accounting policies. A lot of things are there. Now that particular, all these things are based on your financial reporting framework. Your schedule 3 says how to make a financial statement, like aging also. As per now, schedule 3 of trade receivables, remember there's the aging requirement, credit impaired, debtors considered good, considered doubtful. A lot of things are there. Remember? So if your schedule 3 requires some additional information to be reported, if your India's requires some additional information to be reported, can we need to understand, like what that additional information is required. Like till the time you are not aware, like what India says, what schedule 3 says, how can you prepare your financial statement? You cannot. You need to understand your financial reporting framework first. You need to understand in which category the entity falls, whether it's a SME, whether it's a level 1, level 2, level 3, listed entity, private company, schedule 1, division 1 is applicable, division 2 is applicable. You need to understand listing agreements are applicable. What is the scenario? You need to understand the entity, its operation, including the accounting system, everything. Then only you can compile the information. So same way the standard says that the practitioner is required to obtain understanding of the entity business, operation, entity's accounting system, accounting records, okay, applicable financial reporting framework, including its application in the industry, everything you are required to understand. Then only you can do a compilation. Otherwise, you cannot do a compilation. So for compilation, first understand the entity and its environment. Kind of, you are doing SA 315. You are understanding the entity and its environment. Then the practitioner is required to compile the financial information using the records, documents, explanation provided by the management. Simple. I need to use what is given by the management. So compile the financial information provided by the management. So whatever your management has given to you, use that. Okay. Discuss with those charged with governance as appropriate those significant judgments for which the practitioner has provided the assistance. So you need to discuss with the management, like if you are taking any judgment, significant judgment, okay, in course of compilation of financial information. So discuss with management or those charged with governance significant judgments. Prior to the completion of the engagement, okay, the practitioner, the practitioner shall read the compiled financial information in light of his understanding and applicable financial reporting framework. Kind of, a requirement to read what you have prepared. Read the compiled financial information. Read what you have prepared. Whether it is, appearing correct with respect to whatever information you have. In light of, the information, understanding, details available with you. Now, let's say, for example, during the engagement, you identify there is something wrong. There is a misstatement. Records are incomplete. So judgments are inaccurate. There is something, not appropriate. What you will do? In that case, if you identify that, practitioner becomes aware that the records, documents, including significant judgments provided by management are incomplete, inaccurate, unsatisfactory, the practitioner is required to bring to the attention of the management and request the additional or corrected information. Again, bring to the attention of the management. Do not issue an opinion. Okay. If you identify incomplete, inaccurate records, documents, okay, bring to the attention of the management and request the additional or corrected information. Okay. But do not issue an opinion. You are not here to issue an opinion. I cannot say, okay, management has not corrected the information, that's why I'm issuing adverse opinion. No. If practitioner is unable to complete the engagement because the management has failed to provide the records, documents, explanation, information, including significant judgments as requested, then the practitioner shall withdraw from the engagement and inform management of those charged with governance for the reasons of withdrawal. Like, for example, you asked management, okay, give me corrected information, give me complete information. If they are not providing and you are not unable to complete the engagement, then practitioner shall withdraw from the engagement. Simple. And inform management and those charged with governance with respect to the reason for withdrawing. Okay. So if the information is given to you is incomplete, you are not able to complete the engagement due to missing information, incomplete information, inaccurate information. In that case, inform management, withdraw. If practitioner becomes aware during the course of engagement that the compiled financial information do not adequately refer to the described financial reporting framework, or amendments to the compiled financial information is required for making them not materially misstated, the compiled financial information is misleading, in that case, propose the amendment. So if practitioner becomes aware, three things, okay, that compiled financial information does not adequately refer to the described financial reporting framework, means financial reporting framework which is used is not appropriate, or the financial information does not adequately refer to that particular financial reporting framework. Okay. Or amendments are required, or the compiled financial information is misleading. Amendments are required, okay, for making it not materially misstated, or financial information, compiled financial information is misleading. If these are three scenarios, then request management appropriates amendment. Request management, please make the changes. Please make the necessary changes. Propose the appropriate amendments to the management. Now the question comes is, what if management declines or does not permit the practitioner to make the proposed amendment? If management declines, okay, or does not permit practitioner to make proposed amendment, withdraw from engagement. The practitioner shall withdraw from engagement and inform the management for the reasons. Because we cannot issue an opinion, we need to think of withdrawing. Otherwise, we could have if it would have been assurance engagement, we would have issued a like qualified or adverse opinion or disclaimer of opinion. But this is not an assurance engagement. We are not issuing any opinion. We need to withdraw from engagement if management is not rectifying. Okay. If withdrawal is not possible from the engagement due to some circumstances, then understand the professional and legal responsibilities. Okay. What is the professional and legal responsibility applicable in the circumstances? Because that will be applicable from case to case basis. And practitioner needs to obtain an acknowledgement from management or those charged with governance that they have taken the responsibility of the final version of the compiled financial information. Means a management representation that management has taken final responsibility. Responsibility for the final version. Auditor, or sorry, not practitioner, is not responsible over here. See, now the question comes is, if management declines and you cannot withdraw from the engagement, should you report to the auditor of the company? Answer is not a simple answer. It's not a straightforward answer, because see, you are bound by the confidentiality. You need to understand your legal responsibilities, your professional responsibilities, uh, going beyond that and disclosing things to the parties who should not be, made aware of these particular engagements, or who are, not part or party to the engagement, may result into breach of confidentiality. So there is a very thin line reporting and maintaining the confidentiality. So you need to understand what is your legal reporting requirement under, let's say, for example, if you are, you are being hired as a part of, in-house engagement, like, management wants to prepare MIS. Okay. Then what is your legal responsibility? What you have added in your engagement letter with respect to reporting, withdrawing, if you cannot withdraw, what is the terms and conditions of your engagement? There are a lot many things which are there into the picture, based on which we can say, yes, you can report or not. But having said that, it's not a straightforward answer. No. Any doubt till now? Any doubt? Any doubt? Any doubt, guys? Okay. If no further doubts, we keep till here. Okay. That is performance of, engagement, SRS 4410, that is 3.5. Okay. In the next lecture, we will continue from here. We will discuss the reporting part. We'll discuss the, SQC1 requirement. We will discuss communication with the management, and we'll see some more questions on this topic. Okay. So, okay. So there is one doubt whether to tell the auditor or not. No straight answer. It depends upon a lot of things. There is no direct answer to that. Kind of a gray area, you can say. So, you have to make sure that there is a no legal responsibility on you, legal liability on you. So there are not many things into the picture. There is no direct answer. Okay. Any doubt, guys? Please revise whatever we have discussed today. Please read forward for this particular chapter. Okay. You know, the rest of the content of this chapter, and if possible, the next chapter 10 also. So if time will permit, in the next lecture, I will start chapter 10 also. So please read chapter 9 fully. Read chapter 10 if possible, because that is also very important one. There is a SRE that is required to be discussed. Review of historical information, review of interim financial information. Okay. 2400, 2410. So we will discuss SRE also over there. Okay, guys. So please request you to, read, come up with your doubts, and then we will continue in the next session. Okay. Please also provide your feedback. That is very, very important for me. Very important to understand whether you are getting the things or not. So it's kindly, I request you to provide your feedback. Yeah. Okay. So if no further doubts, thank you. Thank you, guys. Thank you for participating in today's lecture. I'll see you in the next lecture. And Happy New Year in advance.